Good evening and welcome to the IPC and Independent RX Consulting CARES Act webinar. My name is Mark Kinney and I'm the Senior Vice President of GPO Relations for IPC. We find ourselves in challenging times, and to address the impact of COVID-19 on small business, the federal government last week passed legislation that included $350 billion in loans that were designed to financially help businesses and their employees. To address community pharmacy options under the new law, I would like to introduce Owen Bondurant and Rich Danhoff of Independent RX Consulting. IPC and Independent RX Consulting have worked together over the years to deliver value-added services to IPC members. Not only does Independent RX Consulting provide accounting and business consultative services, but they are also pharmacy owners themselves. With that, I will hand over the presentation to Owen and Rich.
Thanks, Mark. This is Owen Bondurant with Independent RX Consulting. I am a partner in the firm. Just a quick disclosure, this presentation is intended solely for general educational purposes. It is not intended for the purpose of providing specific legal, accounting, or professional advice. So we wanted to accomplish a few things. So we're pharmacy owners ourselves. We own pharmacies. And as an owner, our question was, one, does this apply to me as a pharmacy owner? Is it something I should be doing? And to us, when you go through this presentation, you're going to see quite a bit of really specific technical information. There's a lot of bullet points. We do not plan to read every one of these bullet points and expand on them. Our goal here is to give you the knowledge, the awareness, so that you can make a good business decision for your pharmacy and know what advisors you need to talk to, who you should get in your corner, be able to ask them questions and have an intelligent conversation about this. And we've gathered most of this information from the Act itself. We've talked to numerous banks, several accountants, and lawyers. And again, we want to give you information on how this applies to you as a pharmacy, how the CARES Act is going to impact you as a pharmacy. So we're going to do that in three ways. One, should you actually be doing any of the CARES Act? Should you apply to these? We want to go into detail about why you should, and then a summary of the CARES Act itself, and make sure you understand the components. And then lastly, how do you manage the money if you do get the money? How do you deal with it? What should you do with the cash? And talk about some of the business things that you need to think about. So let's get into this. We get a lot of calls. We've gotten a ton of calls about this. And the number one question we've had is, should I take out an EIDL or PPP loan in general? So let's talk about a little bit about what they are. The economic injury disaster loan, it is strictly a loan. It's an actual loan. You can loan up to $2 million. It is a 30-year loan at 3.75%, but it is an actual loan. And we'll get into the specific details in a few slides. The Paycheck Protection Program, this is a loan, and it was designed to give small businesses money to keep their payroll going and to keep enrolling and paying employees. It is intended to be forgiven in that they're going to give you the money and you will not be paying it back as long as you follow some rules, and we'll get into that. So,
yeah, and just as a backdrop, I mean, we've had so many conversations with so many different stores in the last week, and there's been a lot of confusion. And I would guess that a lot of people online for this call have already either seen a webinar or applied for the loan themselves. But it's amazing how many people we're still talking to that don't understand it, that haven't filed anything, and that are unaware of exactly what to do and whether they or not that they should be applying for these loans. And so as we've got these two loan opportunities in front of us, you know, it's important. Also, a lot of the webinars that we've seen have been very technical. They've been attorneys and accountants, and this is, again, is as pharmacy owners, and as we look at our own business and the threats to our own business in this time, how do we protect that business long term? I had a conversation today with a doctor in town, and he mentioned that we were doing a webinar tonight on CARES Act. And he said, well, how is pharmacy applying for any loans or help under the CARES Act? Because pharmacies are obviously open, they're busy, there's a lot going on, they're on the front line. So unlike restaurants and other lines of businesses that have been impacted significantly or shut down, pharmacy's going. And I said, well, just 20 seconds ago, you were telling me that you're working 1 day a week now as an orthopedic surgeon because non-essential surgeries are shut down. I said, if you're not in your office, then you're not writing scripts. And if you're not writing scripts, we're not filling scripts. And I can say from our stores, 3 weeks ago was probably the biggest week we've had all year. So we filled more scripts than we filled in any week this year. And yet now it's starting to come back down, right? So everybody was filling up their maintenance meds, making sure that they had the drugs or stuff that they weren't compliant with before, and now their doctors are telling them to be compliant. So yeah, there was a big rush and we saw a lot of activity, but there's a significant amount of uncertainty as to what's going to happen going forward as doctors' offices shut down for not essential, as dentist office. Our compounding lab has pulled back significantly with, we do a lot of eye doctor and those types of scripts, and those have basically dried up. So, this is a real threat to the longevity of our stores. And as you look at stores, and as you know, as pharmacy owners, the margins in pharmacy right now are thin, right? And you can guarantee that in 3 weeks and in 3 months, CareSource is going to, or CVS Caremark and Optum are going to be coming back for their DIR fees, right? They're not going to forgive those DIR fees. So we're going to have cash to pay for those, even though, some of the.
Yeah. So, the number one thing that we've gotten asked is, people are being told that, hey, I shouldn't take this because my business has been up and it's actually been really good. But we don't know what's going to happen here. We don't know what the short and long-term effect to this is going to be to the economy. And this capital that we're going to go through is very, very favorable terms. And so it'll pad your business with cash while we weather this storm. And if you're still not sure after that conversation, a couple of things to consider. The EIDL loans, these are loans, but they have no prepayment penalties. So, if you just get this loan and you never use the dollars, you can just hand the dollars back. There's no fees. There's no, it's not a traditional SBA where you have to pay $50,000 of fees. You just get the money, you can hang on to it. If you never use it, you can hang it back. The PPP loan, there's a few key things here. It'll help you get 8 weeks of payroll, rent, and utilities. I mean, you're getting a lot of money that can build up a cash reserve during a crisis. That money you get is not taxed, so it's not going to be income on your P&L. And then it has favorable terms. So if you don't use it all and you don't get it all forgiven, it's only at a 1% rate at 2 years, so it's easy to pay back once we get through the crisis. So these loans are not very risky to your business, and all they're going to do is help you as an owner. So which one should you apply for? Well, it's our opinion you should apply for both. There's no penalty to apply. But just to give you some guidelines, if you've got a lot of payroll or just normal amounts of payroll, the PPP is forgiven. It has a forgiveness provision, and they will give you money for the payroll over the next 8 weeks. So if you've got a high payroll number in your business, it's going to help you over the next 8 weeks build up some cash. On the EIDL side, if you have a high cost structure around rent or utilities, mortgages, any kind of heavy burden with regards to outside of payroll and your cost structure, and you don't feel like the PPP is going to be sufficient enough, then you should be looking at this loan as well to supplement yourself over the next year. And we'll talk a little bit about how to manage this towards the end.
There was a bit of confusion up front as to whether you could apply for both loans or if you had to choose one or the other. I think the direction is clear that you can apply for both loans. They are different. As Owen just said, the PPP is based on payroll, and it is meant to provide you resources to keep your people employed. The government would rather pay you as a business owner to keep your employees employed rather than you have to furlough employees and those employees go on the federal unemployment. So that makes restarting the business when the economy, when it's time to get out and start getting the businesses going, it makes it much easier. It keeps these people productive. So they want to give you the money to keep these people employed. And that's what the PPP program is all about. The EIDL program is an extension and an opening up of the disaster loans that have always existed within the SBA. So the EIDLs are intended for different purposes than the PPP, and that is the key. So if you're going to apply, we need to make sure, and we'll talk about that as we go through each one of these loans separately, that you use the resources that are, if you get resources from one or the other, that you use them for their intended purposes and that you don't cross over. So that'll be the key. The PPPs, we're actually seeing loans that started on Friday. People started applying for the PPPs on Friday. We've already seen some get awarded. Haven't seen the dollars issued yet, but we've seen the approvals come through and the amounts. So that will be happening rapidly. We do believe it's going to take some time for the EIDL because there will be some underwriting that will be required, and it could be 28, 30, 35 days before you even get an approval on an EIDL loan. So applying for them now makes sense. You can make decisions later when the loans are approved and you decide whether to take the resources.
So let's go through each one. We talked a little bit about the paycheck for PPP, the EIDL, but there's actually 4 big components to this. And again, we're going to go through key points here that we think you need to have the knowledge. There is further points in all of these, and you can refer back to them. It'll be available on the IPC website. And so the PPP is made available to businesses that were in operation on February 15th, 2020. It's for small businesses with under 500 employees. Applicants will apply for 2.5 times their monthly payroll. We'll get into how that's calculated in the next couple of slides. The approval is carried out by your lenders, and you do need to lean on the lenders here. There will be no underwriting, no credit, no personal guarantees or collateral required for any of these. And that's huge because, again, that lowers the risk of taking one of these. And payments will be deferred about 6 months if you have to pay any of it back. And there are a couple certifications. You do need to certify that you have uncertainty due to the current economic conditions. We talked about what some of those uncertainties are. One I'd like to add to that is we don't know if there's going to be drug shortages in the next 3 to 9 months. And so that's another thing that could eat up cash that is caused from this, but may have a delay in us seeing it later on. And you also need to acknowledge that the funds will be used to retain workers, and we'll go into exactly how that is done. So the calculation, I'm going to use number 2 here. I want to preface this that you need to talk to your lender. Almost every single bank we have talked to has calculated this differently. And the banks are in charge of managing how this is calculated and forgiven. They are interpreting the Treasury and the SBA guidelines, so it's up to their interpretation. So you need to make sure you understand how the lender calculated this. and work with your lender to come up with an amount. But the overall piece to it is that you will take your total payroll for the last year. So some banks are asking for 12 months since your last paycheck. Some are asking for 2019, the fiscal year. If you haven't been open for a year, they're using January 1 of 2020 through February 29th of 2020. And they're taking your average payroll per month. You cannot use dollars above 100,000. So if you have a pharmacist, for example, making $130,000, you will only use 100,000 of that 130, right? And that'll go into the calculation of your average monthly payroll. So they'll take that, and then they'll take the average monthly and multiply times 2.5. So if you have payroll of $30,000 a month, they'll take that times 2.5, and you will get $75,000. And that's the amount that they're going to loan to you. And it will be forgiven if you follow the guidelines we're going to go through next.
Yeah, so these are really simplistic examples that are up here, and they were meant to be simplistic. In reality, when you work with your bank, it won't be quite so easy, right? Average monthly payroll is not typically a thing that you have in your payroll service, because we typically pay people every 2 weeks. So you have 26 pay periods a year, and they don't line up with the months. So it's a little cumbersome trying to gather and collect the data. And that's where we keep emphasizing that you do need to work with your bank, because each of the bank has a little different criteria that they're using to document this. And again, these loans have been turned over by the SBA to the individual banks to administer. And they are holding the banks accountable to that. If the banks follow the regulations appropriately, the federal government is guaranteeing these loans and backing these loans 100%. If the banks fail to follow the regulations and don't do the due diligence and the work to make sure that the loans are handled and administered correctly, the federal government is not going to back the loans at all. So each bank has an individual responsibility, and it's a little disjointed at this point, and there's a lot of different information that's bouncing around. One of the big pieces is what is gross versus net, and what is required. Is it gross payroll or net payroll? So just for a quick example of what the difference between when you hear gross versus net, and again, it should be gross payroll, because you as an employer, as a business owner, when you pay an employee, let's say you pay them $1,000 in a pay period, you're not actually paying, the employee may have earned $1,000, but you're not actually paying $1,000 to the employee, right? You're paying the employee potentially $800, and then some of that amount, that additional amount, is going directly to the federal government for federal income tax withholdings. But you as an employer still have to pay the $1,000. And so, you know, the senators have come back and given clarification, and there was some Treasury clarification on April 6th, just 2 days ago, that basically said that, yeah, we were trying to get gross payroll, not net payroll. So net payroll would be the $800, gross payroll is the $1,000, and that's what you have to pay on behalf of your employee. You have to pay the employee themselves, and then you have to pay the FICA, which is broken down between Social Security and Medicare taxes. You have to pay the employees withholding taxes and remit that to the federal government. And that is the gross payroll that we are looking for to calculate on what they are going to lend to you. So you want to use a gross payroll number, and that's what your bank should be looking for as well, is what is your gross payroll by month, and then multiplying that by 2.5 times. And again, they're loaning based on your payroll.
They're loaning based on the payroll. So this loan is supposed to be forgiven. So let's talk about how you can get it forgiven and how you can use this. And again, we're going to repeat this several times. You need to talk to your lender, because the lender is interpreting the rules, and they are the ones who are going to manage and determine if it's being forgiven. So you need to understand their interpretation. But a few things that we've seen here is that the forgiveness will be given if you use the dollars. So if you get $75,000 and you use those dollars for the appropriate things, which we'll go through next, in 8 weeks from the time that you receive the dollars, okay? These dollars are not taxed, so it is forgiven debt. It'll go on your balance sheet as a loan. It will be forgiven. It does not come as income. The forgiveness also requires that you keep FTEs and that you're keeping the same amount of FTEs that you had for the period between January 1 and 2/29. A lot of banks are asking for what your total employees was on February 15th, to be specific. So again, talk to your lender to find out how they're determining what your total FTE is, because you need to have the same amount at the end of the period. Forgiveness, you can rehire employees. So if you've let some people go, if you rehire them prior to the end of the 8 weeks, you can have them back on. But the banks will be documenting this. So you will want to ensure that you document how these funds went, and you're going to have to hand them that documentation. So make sure that you follow this and are able to give them what you need. The last big piece to this is if you receive $100,000, 75% or $75,000 in that case will need to go towards payroll. The rest can go to rent, utilities, and mortgage interest, but 75% has to go towards payroll.
Yeah, and let's just talk a little bit again, back to what the government's trying to do. They're trying to keep people employed. So they're giving you these dollars to keep those people on your payroll. So when they're looking at the FTEs, they are looking to make sure that you have the same number of FTEs down the road that you did at February 15th. And if you have your headcount decline significantly, it will be counted against you in the forgiveness. Or if you take an individual employees and reduce their wages significantly, it will be counted against you in the forgiveness aspect of the loan.
So again, the use of funds. So if you get $100,000, you'd have to use $75,000 towards payroll, and then you can use it for rent, utilities, and then mortgage interest, so interest on mortgages. So what happens if you have $100,000 and you only spend 90 of this? Well, you will have to pay 10 of it back. So you can either hand it back to them because there's not prepayment penalties on it, or you have 2 years at 1% to pay that 10 grand. But remember, you've just gotten 90 that is tax-free, and it's a free loan basically. So you've just freed up $90,000, so you should be able to pay 10 of that back, which again is just coming back to that this is a pretty low-risk loan as long as you track all of this stuff. Use of funds, the payroll funds would include, gross pay, as Rich had talked about, vacation, sick, severance, benefits, including premiums, retirement plans, and state and local taxes. So you can use all these payroll dollars during this period for those. There are a couple exceptions. Individual compensation over 100. So if you've got a pharmacist, it's 130. They're only going to count that 75% for 100,000 of that person, your average monthly for 100. You cannot use it to pay FICA. Individuals who've claimed the Families First Coronavirus Response Act, you can't pay them and have them get the Families First. And then any compensation for employees who have a place of residence out the U.S., they have to be residents of the U.S. So how do you apply for these? First off, these, you go to your lender. These have to be through a bank. We highly suggest you go to a lender who you have a business checking account with, or that you already have a loan with. All the pharmacy banks, First Financial and Live Oak, are also processing these now, so you can also reach out to them. Again, each lender has different requirements, but these are some of the things that we have seen across the board. They need payroll reports for 12 months that details how your payroll's broken up. And if you have any 1099 independent contractors, they want that. They definitely want an IRS quarterlies for 2019, your 940, 941, or 944. Those are things that your accountant should be able to provide you. If you have health insurance, they want to see that you've paid it. So you have to show documentation, and same with the retirement plan. You know, you can't claim that you have a retirement plan that hasn't been funded. They need to see that it's actually been funded. These are things that you should prepare to have, because every bank is going to ask for these for sure.
The next piece of the presentation is going to step through the EIDL loan. And as we said before, this is not a grant of any sort. It is an outright loan. It is a loan with very favorable terms. Typically, an SBA loan that you would get in the last year or so would be a 10-year note and would be at about 7.5%. So these are 30-year notes at 3.75%. It is part of the disaster program within the SBA. So they have loosened the guidelines for that. You have to be in business on January 31st. Normally, you would have to be in business for at least a year to get the disaster loans. That's been waived. The coverage period is basically January through the end of the year. There are still, unlike the other ones, there will be some, or unlike the payroll loans, there will be some underwriting for this, so they will check your creditworthiness. They will waive the requirement for a personal guarantee, though, for notes that are under $200,000. So again, they've loosened the requirements for the most part on the EIDL loans and made them more accessible. At the end of the day, you still have to sign and indicate that you have a disaster or a strong need for these types of funds. So again, I think you need to step back and think through your current situation on where you are financially with your store, you know, whether you have existing loan payments that are going to need to be met, whether you have, you know, large wholesaler bills due, those types of things that could be in jeopardy if your store slows significantly with the slowdown in the economy. So you'll need to think that through, and not just think it through, but actually document it as you apply for these loans. There is an emergency grant portion. So when you go to fill them out, you can apply for an emergency grant. That would be $10,000. It's paid right up front. And even if your loan does not get approved, the emergency grant portion would be forgiven, and it would be essentially a grant. So if you actually did get the $10,000 up front, that would be $10,000 that you would not have to pay back again, even if your loan does not get approved at the end of the day. And like we said, these loans could take a few weeks to get approved because they do have to go through the underwriting process.
And we're hearing that they're going to authorize up to 6 months worth of your gross profit. Is you can get up to $2 million, but they're loaning basically 6 months worth of your gross profit.
And there will be no payments on these loans for until January of next year of 2021. So there is no payment or accrual of interest during the period. So one of the provisions of the EIDL is that you cannot use it for the same things that you are using the Payment Protection Program funds for. So we'll get into that a little bit. And that's the real key, is that, again, they do not want you double dipping. They don't want you getting a PPP loan and then turning around and getting an EIDL loan and using the EIDL loan to cover your payroll. They don't want you to double dip. So that makes sense. This slide is pretty basic, but again, it just emphasizes there is no forgiveness. This is truly a loan that you are signing up for and that you are signing up to pay. So the application process is really easy. And unlike the PPP loans where you're going through your bank and lenders, the EIDLs are going directly through the SBA. And so if you go to sba.gov, if you haven't already, The initial application is pretty short and simplistic, so it's easier to do than the PPP. So you're going to provide some basic information in, I think there's about 5 slides there that they take you through, you know, getting some, there's basically just a bunch of disclosures that, you know, on different topics that, and then business information. And the 2 pieces of financial information that they're going to ask you is your revenue and your cost of goods sold for the period beginning of February 1 of 19 through January 31st of 20. So that's what they're going to take to say, these are my average gross margins for that period. And from what we understand is that they're loaning generally, or the loan target would then be based on that gross margin, your monthly gross margin times 6. So again, this is really easy to do, to go fill out these applications and to go through that. So it may be worth doing. It doesn't mean you're going to get the loan. It means that somewhere down the road, somebody's going to contact you and ask for a bunch more information. And you're going to go through more of a formal loan process at that point, at which time you could back out of it, and if you don't want to proceed, or you can provide the information and proceed. So our thought on these funds too, when we talk about not using them for PPP type stuff, if you had the funds, you could certainly pay primary wholesaler bills, secondary purchases, pay for your pharmacy systems, if you've got automation bills, if you've got those types of just regular AP ongoing types of costs that are not covered by the PPP. So do not use EIDL dollars to cover payroll, rent, you know, mortgage interest, those types of things, utility bills. Those are for PPP, keeping these EIDL proceeds used for different purposes. So that kind of wraps up the EIDL loan. Here's one that hopefully most of us are aware of, but this one is for everybody, whether you qualify or whether you have applied for either of the other 2 loans. If you have an SBA loan already in place and you have an SBA 7A loan, the government is going to make your next 6 payments for you. So, and there is nothing that you have to do. Beginning today, they will no longer, your bank will no longer pull your loan requirement.
And that is principal and interest, and you will not have to pay it back. They are paying it on your behalf, and it will lower your principal as if you paid it.
Right. So that's a huge benefit and valuable for anybody that has an existing SBA loan. And in addition to that, if you are in the process of applying for or have gotten approved for an SBA loan, that will, as long as you receive the loan by June 30th,
and there's talk that they may extend, they've extended that maybe to September 27th. Right now we're sure it's June 30th, but this has been changing a lot, and we're hearing that they're going to extend that to September 27th.
So if you were opening a pharmacy, or you were in the process of purchasing a pharmacy, or you were in the process of selling your pharmacy and there's a buyer on the other side that's applying for it, if they do get through the SBA process and get the loan approved, their first 6 payments will be waived, or will be not only waived, they will be covered for you. So your principal on the loan will be reduced by the payments that are made by the government on your behalf. So that's a huge benefit if you have an SBA loan already in place. This next section, so there are a number of tax relief items that are in the Act itself, and they are a little technical in nature. There's certainly something that your CPA should be aware of. I'm not sure that you need to dig into a lot of this stuff. If you apply, the big caveat is if you're applying for PPP, and we believe everybody on this call, if you own a pharmacy and have employees, you should be applying for the PPP loans. So if you're applying for the PPP loans and you get approved for any PPP dollars, a lot of these tax credits or additional deductions do not apply, right? Therefore, people that for some reason were not covered under the PPP loans or other reasons, there are a number of tax, and I'm not going to necessarily read through them, but that'll be very important for if you don't have those loans for your CPA to understand at the year end that there may be some additional deductions or credits, which are much more valuable than deductions, that may be available to you because you didn't take the loans.
And I think the key here is these are the names of them, and we have them in here. If you do not take a PPP, make sure you talk to your CPA about getting these because they are available and you would qualify most likely if you don't take a PPP.
Right.
And what we're trying to do here is just make you aware of them. They're very technical and you really need to have a tax professional help you make sure these are included in your taxes.
Yeah. So for any small business, NOLs, which are net operating loss, there is relaxation of the rules. It's normally 3 years that you can take your losses back. If you've had operating income in any of the last 5 years that you've actually paid taxes on, and this year you produce a loss, you can take that loss all the way back to 5 years and amend tax returns from 5 years ago. So you can, and that's for 2018, 19, or 20. So you can take those, any losses, and go back and recapture some of that tax that you actually paid. So that's a way to get more refund dollars into people's hands so that they have more cash available. There's some changes to the, and some increases to the allowance on interest expense deductions, assuming that you're going to have potentially more interest expense, so they are loosening it and allowing you to deduct as much interest as you can. So that's kind of it for the tax piece of it. So again, the pieces are the PPP loan, which we believe everybody should be applying for. The EIDL loan is something that you probably should apply for, at least initially, as we get this process started for, and understand what that loan is. And then the tax provisions, and if you have an SBA, there is relief for SBA loans out there. So now this is kind of a really important piece is if, you know, and this is a lot of what we wanted to talk about was if you do apply for the PPP and you get dollars, you know, how are we gonna handle those dollars and what are you gonna do with it? So we'll just walk through a few slides here to help you kind of a plan for that so that you're thinking it through. So again, the whole goal here is to pay normal ongoing expenses. This is not a payday to go out and you know, utilize it to build a new compounding lab or an 800 compliant room or something like that. This is more to just pay your normal ongoing expenses and to protect you in this downturn and the potential downturn for your store. So we want to make sure that you're in business and that you're doing well, you know, into next year. So that's the primary goal for getting the loans and protecting your payroll.
This reminds us a lot because, like, let's say you have $100,000 and they hand you $100,000 and your business does not decrease. Well, now you've just gained $100,000. But what you have to remember is the economic fallout from this coronavirus may not happen to you in the next 8 weeks. It might happen in the fall. So make sure that you're just preserving cash right now. I would be careful not taking more shareholder distributions, making significant capital investments yet until the economy has stabilized and we've gotten through all of this. And we see these a lot of situations where people take dating from wholesalers and they get, you know, $300,000 worth of dating and they forget about it because they have these dollars and they make so much more money because they're not paying all their wholesale bills. And then they we've heard stories of people buying furniture and buying new cars, and they forget that, oh, geez, I got to pay this stuff. And so you just got to be careful here, because the economic fallout from this might be delayed. And so just be careful spending these dollars in the near term.
Yeah, the goal is to build up and preserve cash, so that, as you know, right now we're getting paid for those best fill weeks of the year that we had 3 weeks ago, right? Our third-party payers are paying us right about now for those really good weeks. Well, as these weeks are slowing down and we're 3 to 4 weeks out from our third-party payers, I mean, we're going to see a decrease in cash flow. So, but we're still going to have to pay rent. We're still going to have to pay payroll. We've got, debt obligations out there, so that may be outside the SBA ones that are being covered. But preserve cash, preserve cash, preserve cash. And as a small business owner, I think that's been probably driven in your head for a long time, and especially in these challenging times. And that's the goal of these loans, is to help you create and preserve cash. And then at the end of the day, we can decide, if we have excess cash, we can decide what to do with that cash. And so when things stabilize, then we can have some decisions to make. So during the process with that EIDL loan, you're paying your wholesaler with your EIDL loan proceeds. You're paying your employees with your PPP loan proceeds, right? So what's happening if your store is still opening, and let's say you're still filling at 70% of your normal volume? Well, what's happening to your regular cash account that sits for your store? It should be going up, because you're using other dollars to pay those expenses. So as we're using our proceeds to cover regular expenses, our other business accounts should be increasing and creating that extra cash. So once we get through kind of this crisis period, we may have some extra cash, at which point we can decide what to do with that cash. We could pay back directly the EIDL and be done with it, even though it's at a low interest rate and it's got a good amortization period. We could use those dollars at that point. We could use the dollars in our regular cash account to maybe pay down higher interest notes that we already have. We don't want to do that initially. When you get EIDL loans, don't use those EIDL loans to instantly pay down other debt. Again, use those for operating costs current, such as paying your wholesaler and such. Let your cash build up in your regular cash account. At the end of the road, and when things settle, there may be then the opportunity to use those dollars and hang on to the EIDL loan at 3.75% and 30-year amortization, and pay back your 7.5% commercial loan, or pay down your SBA loan that's at 6.5%.
And keep in mind with the EIDL, I mean, there's no prepayment penalties. So this might be a situation where you get it, hang on to it. If you don't use it, you can just give it back to them. Also, we as pharmacies have cash flow ups and downs, just even when there isn't a crisis going on. This is really cheap money that you could access and have out there almost as a line of credit that you're paying very little amounts on. So, these are the things you want to think about once we get through this kind of crisis period.
So how do you manage the proceeds as you get them? I mean, the most important thing is that we're going to have to report back on how we utilize the proceeds, right? It was very clear that we couldn't use EIDLs for PPPs, and PPPs had to be used for payroll and rent and utilities. So we recommend that when you get the proceeds, and again, they're coming out already and starting to award PPP loans, you probably don't have enough time to get a bank account opened, but as soon as you get the money dispersed to you into your regular bank account, get a second bank account open and move those PPP dollars into that bank account. And then that will be an easy tracking source to say, okay, now we can track all the ins and outs. So if you get $155,000 in PPP loans, put $155 in a separate bank account. It can be within your primary bank, but make it a separate bank account. And then let's make sure that all the proceeds being spent out of that account are for the allowable type expenses. The same with the EIDL. Make sure that you are putting your EIDL in a separate account, and those proceeds are being spent, again, on items that are allowed. Remember with the PPP, it is a loan based on your payroll. It can be expended for things other than payroll. Payroll, rent, utilities, and such. You've got to track that stuff, and your forgiveness is going to be based upon how you spend the money. So it's going to be very important to track it carefully. And so segregating those proceeds, spending them appropriately, working with your advisors to make sure that you're aware of, how you're spending your dollars and what you think your forgiveness amount is going to be. So I think, in summary of all this, and hopefully this has been helpful, I know there's been a lot of these webinars out there. Again, a lot of them are highly technical. We didn't want ours to necessarily be super technical. We wanted to provide enough detail that you kind of understood where it was coming from, but we wanted to talk as pharmacy owners to other pharmacy owners and to try to give you some guidance to say, you do need to go out and get these loans if you can get them, if you're eligible for them. You need to look at your individual situation, but for the most part, there's a reason that Live Oak Bank went to every single one of their clients and put these loans in front of them, because it makes sense to protect what you've built, right? The store that you built and the community that you service. You need to make sure that you're in business a year from now. And so in order to do that, protecting yourself by making the cash available and going through this process makes sense. And we wanted to make that kind of more of a down-to-earth conversation about this type of stuff. You will need some help probably along the way. Your bank will be a very good resource for you. They will tell you what they want in terms of information. You may have to dig into your payroll system. You may have to talk to your accountant and other resources, but for the most part, use the resources that are out there and go get some of this this relief and protect your stores.
And just a couple other minor points. I mean, again, segregate the proceeds you get so you don't have to pay some of this back and you follow the rules. Preserve your cash. Again, we just don't know what's going to happen. We don't know if there's going to be drug shortages. We don't know if the economy is going to slow us down. We don't know when doctors are going to be back to work. We just don't know, and that can hurt us. And make sure you just work with your advisors. And that's all we've got here. We thank you very much. These slides and the recording of this webinar will be available on IPC's website, ipcrx.com. And we thank you very much, and we thank IPC for hosting this.